Okay, so for today we have something very interesting. I'm going to tell you how some of my clients they are escaping the rat race. So if you look at this chart, you will see that the asset, the percentage of each asset in people's portfolio, people who have 10K, 100K, 1 million, 10 million, 100 million, and 1 billion. You can see the liquid assets, their primary residence, their car, their retirement, life insurance, mutual funds, stocks, fixed income, managed assets, real estate, and business interest. The first thing that you notice at the beginning when you just open this chart is, look, people who are escaping the rat race, they are putting their money with a high speed to business interest, okay? This sounds to be sometimes obvious, but you can't believe it, that the tier one, the most frequent client that we get in Easy Cafes is people who are working for big companies like Google, Facebook. They just climb the corporate ladder. They are sometimes very well paid, and they are sitting in a house in California for 5 million, 6 million and more. They have a very fancy car, and all they're doing every day is just to work more and pay off their mortgage, and all they have is their primary residence and the car that they have in most cases. And whenever they want to launch a business, they are too much afraid to just start something. And you see them that they, even when they run a business, they just do it at a much lower stage than other people, other type of clients that we have. The other type of the clients that we have is typically these clients come from Asia and Eastern Europe. And the pattern that you see in almost all of them is that, okay, they have a house, they just paid, let's say, $100,000 in cash, and they have a very simple car, a $5,000, $10,000 car, and then they're putting all they have into their business. And the difference between these two tiers that you see is huge. You can't believe it unless you track it, okay? Because for most of these clients, we are working for 5 years, 10 years, okay? In the first 1 or 2 years, you don't notice that much, but after 5 years, 10 years, you notice a big difference, okay? I had a client in Singapore. He was just 23, and he did almost the same method, a very cheap house, very cheap car, then putting everything into the business. And now that he's 29, you can't believe it. He's much ahead than most of my clients that they went to the right school, they went to the big name company, they paid all they had to their primary residence in an expensive city, and they spend most of their money. So what I'm saying is, in order to make a decision much faster and don't be afraid to launch and grow a business and putting your own money into the business, you need to decrease. You need to just go to, let's say, Eastern Europe. You just pay $100,000, $150,000, at most $2,000. You can get beachfront apartments in Greece, for example. Okay, so when you can do something like that, and then you decrease your cost by at least 50%, and you also decrease your taxes. So why not? Why you're just sitting in an expensive high tax country and putting everything that you earn from your job into something that is not generating any cash? Okay, so your primary residence is not going to make money for you. You're just sitting it. You're not making money out of it. Okay, so this is my advice. For most of these clients, we see the big trends. We raise, let's say, a seed round, then Series A, then Series B. So this is coming from what we are seeing in the market. I can say at least 100 observations. Okay, so from my point of view, it's completely varied because I see that every day, and I hope you can also escape the rat race with the same method.